Hello guys, good day. How are you all doing? All right, very quickly, I want to do some justice to some concept that few among you have requested of me to make a video on. All right, and this section is going to be talking about um, that particular question that they've requested of me. All right, so what is the topic? Right, the topic is how to identify right a break of market structure, right, BMS, right, compared to a stop hunt. So I'm going to name it a stop hunt or liquidity grab, right? Stop hunt or liquidity grab. So this is what we're going to look at um, today, right? Right, as you all know, right, that I have made a a teaching on market structure. Then also I've made a teaching on stop onto liquidity graph, right? And you'll be able to witness that this particular concept, I mean, these videos or teachings, they've really done justice on whatever things you are asking for. So this is like a backup video, although I have some series of free tutorial, free webinars to hold with you guys just to re-emphasize on those things that we've taught before, so that you can understand them very well, and so that those information can be transmitted to your subconscious mind. So in doing this, I would like to explain the characteristics of market structure away from the characteristics of stomp hunt. And this is very, very important if you really want to identify a break of market structure away from the from a stop hunt. Okay, just like what I've told you before, for you to identify market structure, right? For you to identify market structure, there is a characteristics, there is something that market will be doing. Now we have two phase or two types of market structure. I mean, let me say um two types, right? Yeah, of structure, right? A trending structure and a compressive, I mean a market structure, again, a trending market structure and a ranging market structure, or a consolidating market structure. So these are the two phases of the market. We can call it phase of the market. Then under the trending market structure, we can see something underneath also, which number one, we have the bullish market structure, right? The bullish market structure, I need to use bullish market structure. Then also we have number two, we have the bearish market structure. All right, we have the bullish market structure and we have the bearish market structure. Now there are some characteristics of a bullish market structure and also some characteristics of a bearish market structure. In this, we have in the bullish market structure we have higher highs and higher lows. Then in the bearish market structure we have lower lows and lower highs. So these are the features that you're going to see in a market for you to know that the market is bullish. That is when the market is creating a series of higher highs and higher lows, right? Then you can see that the market is bullish. Don't forget, it is a trending market. But in that particular display that the market is making at that particular time, then we also have the ranging or the consolidation phase that the market will also be giving to us. Now, don't forget, we have two phases, right? The first phase is when the market is trending, and the second phase is when the market is consolidating. Then under that trending, all right, we can have the bullish market structure, then we can have the bearish market structure. Then the third phase will now be, I mean, the other characteristics will now be the ranging market structure, which is the second phase that we're really talking about. So the market will go in a bullish market structure in terms of higher highs and higher lows. Then on the bearish market structure, lower lows and lower highs. So these are very, very important if you really want to catch what we are talking about. Now, let's quickly look at that. Now, there is a particular trait that the market must be exhibiting when the market is trending. Don't forget, I've already taught you the phases of the structure, right? And I've taught you the characteristics. Then then I want to talk about the traits, right? What are the traits that you're going to see for you to know that the market is really trending, which is very, very important. And this is what we call uh, um, the impulsiveness of the market, right? The impulsiveness of the market. This is very, very important. So when the market is going up, right, just like what we said in a bullish market structure, right? The bullish market structure, we said the market will be creating a high highs, right, or and higher lows, right? So the market will be creating these two traits or two characteristics. So in a bullish market structure, we're going to have impulsive move that break market structure, then compressive, right, nature of the market to form higher lows. So impulsive move up that will break market structure must be the one to form the higher highs, right? Then the compressive or the compression must form the higher lows. Then it's, the next phase, we're going to have impulsive move that break market structure. Don't forget that when the market breaks a previous structure in an impulsive move, then we see that that is a break of market structure, right? Then, and don't forget, I'm still going to talk about that, the characteristics of what must break this particular area. You know, this was the previous high. So this particular structure, I mean candles that broke this structure, there is something that we have to see there now. And those things are the trade I'm really talking about, the impulsiveness, the impulsive move that breaks structure. Then we must have a minimum of three candles that actually break it. Now this is not at all time. Sometimes you can have one candle, sometimes you can have a week, the market will continue to go higher. But for me, I prefer to see market breaking it in an impulsive move with more than three candles, then I will know that okay, the market is continue in a bullish direction. So this is higher highs, as I have said. All right, then we're going to have compression on the ranging market structure that will form the higher lows again. Then before we have impulsive move that break market structure again, then the market will continue that way. Then for the bearish market structure, we're going to have lower lows, impulsive move, lower highs in a compressed manner, right? Lower lows in an impulsive move, lower highs in a compressed manner, lower lows in an impulsive move. Don't forget the structure or the candles that break the structures are very, very important for us to now determine if it is a liquidity grab or a break of market structure. Now, the first thing you need to identify there is that did was the structure, right, broken with an impulsive move. Now, if it's broken with an impulsive move, then that number one scored has been made. Then number two will now be how many candles broke that particular structure. If it is more than three candles or from three candles upward, then I will say that this is a break of structure. Then if I can see just a wick, just taking out that high or the low or just one candle or probably two candles, then I will say that it's just liquidity grab. Then there is also some other features that I will use to confirm that. And what are the features, right? You can or the confirmatory candles. There are two, right? And I've already taught concerning that, SOB and RRT. So you can go back to my videos on types of other blogs that I've taught. I talked on, I mean, the free webinars I did in December, right? You will see where the video where I explained SOB and RRT. RRT means railroad track, right? So these are the confirmatory candles that I always see if I want to know whether it is a liquidity grab or a break of market structure. So let's quickly look at the chart and see what we're talking about. Now, this is a daily time frame. Is a daily time frame. So I will just be showing you what I'm talking about. Now, please pardon me to just zoom out this price so that I can show you what I'm talking about. Now, look at this. Look at this. I would like confirm that this is a liquidity graph. Can you see? You know, many people would have seen this and would have really said that, oh, this is a break of structure. Now we have impulsive move, no doubt. We have impulsive move, no doubt, but we have two candles that broke this high. Then it was confirmed with an SOB. So seeing this, I would know that price is just up for a liquidity grab. Now, please don't get me wrong. This is not at all time. That is why you need to understand your rejection zone. Because if price is now coming back in a compressed manner, then I will know that there is a high probability that this particular zone will work out. Right, there's high probability, but by the time price took out this particular zone and is coming back in an impulsive move just like this, I know that there is high probability that market will just continue to go down and is going to break market structure. As you can see, it came back and it broke the structure. It's just as simple as that. Now let me show you another example of liquidity grab, uh, which is really different from break of market structure. Now, I mean, in terms of the relationship, now look at this particular area here. Look at this particular area. Can you see that it was broken with a wick? It was broken with a wick. Now, what I will now use to confirm if it is a break of market structure or it is a liquidity gap is now the reaction of the price. Now you can see price is not dropping in an impulsive move. So by the time price got to this OB, right, we have a rejection. Price was also consolidating around this area before we now see a move up. Can you see that? So those are the things that you now use to confirm. Those are the things you're going to use to confirm. Now, look at this. How will I know that this is a break, is a liquidity grab? Now, by the time price took out this low, after price gave us an impulsive move, then price move up in an impulsive move again. Now, in my course, all right, we have a class that we called a DSI, the DSI class, where I taught double side impulsiveness. Now, in double side, I should not be telling you this because it's a free tutorial. Now, when we have impulsive move up, I mean impulsive move down and impulsive move up. Now, in this particular case, we know that price is about to go bullish. When we have impulsive move up and we have impulsive move down, in this particular area, we know that price is about to go down. So this is what we have here. We have impulsive move up and we have impulsive move down. So I automatically know that this is a liquidity grab and not a break of structure. This particular area, I know that this is a liquidity grab and not a break of structure. So by the time price came down in an impulsive move again, right, and went up in an impulsive move, I know that this is also a liquidity grab and not a break of market structure. So price took out that liquidity, though it broke the structure anyway, but I would know that price is about to go up with that particular notion. As you can see it here. Now, looking at this, it broke it with a wick, which is against our break of market structure rule. But how will I be sure that this price will not just continue to go down but go up? Is the reaction of the price in here. Now, price pull back to this block, not with an impulsive move. Then this particular area, price was consolidating. So I know that price is going to have something to do. Now let's now see some differences in what I'm explaining. I hope you're actually getting what I'm trying to say. Now, look at this particular structure. By the time price would have come up, price broke it in what? In an impulsive move. So we can say this is now an higher high. Right? Price broke this structure with an impulsive move. Right? Then you can see we don't have any confirmation candle. Don't forget our confirmation candles are real track and SOB, right? I've already thought on that. Now, price moved up here, then give us a retracement, right? That retracement to form an higher low, that is a compression, right? Don't forget, or a ranging structure to form an higher low. Then price went up again. So by the time price broke this area, right, is with a wick anyway, but price just continue uh, to go up. Now, look at this particular zone. How will I know that this is a liquidity grab? As you can see, this is a liquidity grab here. Price came up. Now, much more confirmation is that price was consolidating around this area. So when price is consolidating, when price is ranging, you should know that whatever high is going to form at that particular place will not be an higher high. So if I'm going to label my market structure here, I will just label all these three highs that I have here as one single higher high. Why? Because price is not really expanding. Price is not trending. Price is just spiking high and moving down, spiking high and moving down. So that's what we have here. But this is a liquidity graph here. Then price eventually formed an higher low, right? So the same thing is applicable here. Look at this particular area. can you see that price did not give us a significant drop before it moved up again? And with that moving up, right, with that moving up, it's just with two candles. So I will know that this is not a break of market structure. It's just a liquidity grab. Then this one again, right, probably move up again. Then this is just a liquidity grab. Then price took off. Now we can see different examples right here, just like what I've shown you as an example. Right, look at this. Can you see this with a railroad track? No. Yeah, with a railroad track here, it's confirmed that this is a liquidity grab and not a break of market structure. Then look at this. By the time price would have retraced back, right, it was just pulling back, not with an impulsive move, not with an impulsive move. Then you can see all this liquidity grab that we have here. Now look at this one, right? That particular high was confirmed with a railroad track, then price continued to move down. This was impulsive, then price continued to move down. Now another way is just for you to determine how to spot your impulsive. What do we call impulsive? Maybe I'm going to make another videos on that, the impulsive momentum of the particular pair at that particular time. Now this is a liquidity grab and not break of structure. Why? Because it's just a week. Now the fundamental stuff for me is that anytime price just broke a zone with one candle or just two candles, I mean maximum of two candles, right, and give me my confirmatory candle, I just took it as a liquidity grab. If that market will just continue to go that direction, but I would have taken it as a liquidity grab. And if price break a structure with an impulsive move with more than two candles, I will take that as my break of market structure. You can see this particular area. Now reading this structure, we can read it this way. Let me start from this area. Then this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is an higher low because market could not make a low, market just made an high. But with this high, is just like a liquidity grab if you really want to spot this. But with this, just like what I said, if I see a candle like this, based on my trading skills and based on my rules, I would have caught an entry around this area. Now, this particular principle that I'm teaching you now is applicable to all time frames. All right, it's applicable to all time frames. I'm just using the time frame as a case study. All right, so I would have picked my entry around there based on my entry rules and the like. So this particular drop, I would have really caught it. That's what we call a sell to buy or a buy to sell, as the case may be. Now, with this, right, I have an higher high, I have an higher low, then all these movements and higher highs up to this particular level. As you can see, look at this particular zone too. It's just with a two candles with a wick. Then this one also, just like what I've shown it earlier. Can you see? Now this is what I called my 3-8 pattern anyway. All right, this is what I called my 3-8, and one of the ways I spot my 3-8 pattern as a reversal. All right, so this is how to spot a break of market structure right from that. Now you can just mark up your chart and you can practice whatever this I've told you. Now look at this. This is a lower high. This is a higher low because market eventually breaks through this structure with an impulsive move and with no confirmatory candles. So we can call this an higher high, this is an higher low, right? Then price continue to move higher, then this is an higher high here. Can you see that is an higher high here because price just broke through this particular area with a wick, right? For me, I would have picked a sell around this particular area when price took out that liquidity, but I still know that the market structure is now high. Then it's just for me to take a sell to buy trade. Then look at this also, we can consider this as liquidity graph. Can you see when taking that particular high, then price dropped, though this doesn't have a confirmation. So everything that you're going to see is just you training more yourself much more in spotting the characteristics that I've just said. Now I will also have probably another class on this. If you have questions, then your question will now make me to see the area I'm going to concentrate on much more, right? Because many of you have actually asked what's the difference between break of structure and stop ons or liquidity graph. But really it's just the impulsiveness. Then for liquidity impulsiveness that break market structure, for a break of structure, then we can also have with many candles anyway, with break of market structure. Then for liquidity graph, a week is the best, right? When a week just took out a high, then price now move down in an impulsive move, I will know that that is a liquidity graph. So after picking this particular high, if price just drop, just like this fast dropping that took place, yeah, then I would know that that is a liquidity graph that has taken place. Now another one is this, right? Another one is this, that I was taken out immediately. It was taken out, just confirm my railroad track, then look at the drop. So it's just a way for me to spot that. Now I think the most important thing that you guys just want to know is that liquidity graph, in which I've already explained it here. Now when liquidity graph happen, we are going to surely see an impulsive move after it happens. But when price now begins to slow down after taking out a liquidity, you should know that it's just a trend continuation, right? After price took out the liquidity and is just moving in a compressed manner, right? Just know that that is also a break of structure, not a liquidity graph. But when price now take a high, then price begins to move down in an impulsive move, know that that is a liquidity graph. I hope this, as you are you understand everything I've said. Look at this. Price took at that particular low, then look at the impulsive, can give us an impulsive move here. So those are the things that you just need to spot, for you to know that. Now if you read this structure, we have lower high, higher low, higher high. Then in this higher high, I love seeing this kind of pattern, right? It's just my best kind of pattern to trade from. My 38 reverse. Anytime I see that pattern, I know that price is about to retrace back. So I pick my trade before any other person would have actually picked that. So the liquidity graph picked that, then we have the movement down, then price moved up again, right? So you can really trade both ways. Now this higher high, higher low, then lower high, lower low, lower high, lower low, lower high, right? We have a lower low, we have a lower high, we have a lower low, then we have a higher high, we have higher low, then we have higher high here. So, guys, I hope you've learned something from what I've explained today, right? And if you really have questions, please kindly send those questions to me. I will do well um, to find another time to explain it again. All right. Until next time, please don't forget to subscribe to this YouTube channel. Then don't forget to follow us on Instagram and also join our Telegram page. Then the mentorship is opened now, right? If you want to join our mentorship, you can reach out to me. I will give you the options that we have so that you can also be part of the big things that is happening in the forex market. Okay, until next time, take care of yourself and bye bye.